It's Welcome to the Resolution.
Hi, Jay. This is Washington Tax. Welcome to the resolution. My name's Stuart. I'm here with Jay Freeborne. We're going to be talking a little bit today about what happens when a loved one dies, usually a parent or someone in which you're the executor. What are your tax obligations? What do you do? Not a lot of information out there. We thought this might be a useful topic for people today. So, what are some of the top lines that people should be concerned about?
Sure. Bottom line is there's two concerns, the individual and the estate. Let's distinguish them. Individuals who haven't filed tax returns, who might have tax liability, their debts could become the heirs. So it's important to wrap up an individual's tax situation, getting the IRS transcripts and or determine what needs to be filed and have their final returns filed, making sure there's no loose ends, as in money owed to the IRS, as that automatically transfers to heirs. So that's the individual side. When an individual dies, an estate is created, which is essentially the assets of the individual, and a whole other component opens up for the estate. For the federal government, you have to have a very, very big estate. In 2022, it's 12, 13 million or more to incur estate tax and require estate tax to be paid. So not many people are going to be filing estate tax returns on the value of the estate. The estate is important if it doesn't close out soon enough. So most estates don't owe estate tax because the heirs distribute the estate pretty quickly, like in months. Mm-hmm. And the estate's below 13 million. There's no estate tax return required. If you do not distribute an estate quickly, estates accrue value. They generate interest, dividends, rental income. There's houses that aren't sold for years that gain in value. And so if you drag your feet on closing an estate or distributing its assets, then you are required to file estate tax returns, Form 1041. And many customers of Washington Tax are estates that just haven't sorted out their assets and owe tax as a result. But if a estate is distributed relatively quickly and is below 13 million, which is pretty much everybody, there's no estate tax returns required. And in those cases, we just file the final individual return or returns. I should add, sometimes people who die, their life's a mystery. And and sometimes their assets are a mystery, which is a segue before we talk about state taxes at the end of this. Some people will get an IRS power of attorney for licensed tax professionals like those of us at Washington Tax to research your loved one's record or non-loved one to get your transcripts to, in some situations, find out where your assets were.
Right.
For example, if you had stock brokerage accounts, there were multiple, you're a deceased person with stock brokerage accounts, you can, by researching their IRS record, you can identify where they had accounts.
What do we need, or what does somebody need to prove that they are the ones who are allowed to get that info? Yeah.
Sure.
What do we need?
The IRS power of attorney form is called Form 2848, authorizing licensed tax professionals and enrolled agents to get access to your records. The executor of the estate signs that.
Got it. So
that's that. That's point number one. Point number two, a death certificate has to be provided. 3, we here at Washington Tax or other licensed tax professionals have to have the authorized rep sign the Form 56. There's actually a change in IRS requirements from maybe a year ago, whereas previous you had to get a letter of testamentary from probate or a letter of administration appointing you as the administrator. Now they just want death certificate and Notice 56, which does have a lot of the letter of testamentary info on it. So once you get that stuff, then you can sign a power of attorney to have a professional get the info.
Notarized?
No notary. And before I forget, there is estate tax requirements in a variety of states. Washington State, you have a $2 million plus exemption on your estate from taxability, but anything above that is taxable. So states have lower thresholds for estate taxes. So if you have an estate bigger than $2 million in Washington State, for example, your estate will pay estate tax. There's lots of exemptions. So be prepared for that. I should also add, if you inherit an IRA or 401k from a deceased individual, the tax benefits as well as the tax obligations end up in your lap. If you do distribute an IRA, you will pay taxes on it. And that is indicated by the Form 1099-R, which you will get if you do cash out a parent or sibling's IRA that you inherit.
Are there any other inheritance issues
On the individual side?
Yeah.
Closing up a person's record with the IRS, like I said, is important for a lot of reasons, but most importantly, your own self-interest, that your deceased person that you're responsible for, none of their tax liability is assessed to you. The IRS is very clear about that. Now, some people, the estate tax obligation that is found in the 1041, I've been a little broad there. Somebody might say to me, well, there was like $2 of interest that was accrued for 2 weeks before we distributed the assets. Should I file an estate tax return on the $2? And the answer to that is probably not. It's like a de minimis amount. I guess there's some gray area there, but if there is a substantial amount of income created by the estate before you close it out, you probably want to file the Form 1041. And, for example, if you inherit a house and sit on it for 7 years, value of the house was when you inherit it would be your basis before you sell it. Definitely contact specialists like Washington Tax on the subject of your deceased loved ones to make sure that their tax record is straight.
Did you want to touch base more on some of the estate pieces, or?
Like I said, the estate tax exemption is really high. You won't owe taxes on the corpus. Corpus is the name for the value of the stocks, bonds, mutual funds, 401ks, IRAs, and real estates left to you. Really, estate tax for the average American shows up when you don't close out the estate and the assets of the estate produce income.
Got it.
Yeah.
Over delay or whatever.
Yeah. It's very common to delay it. We've actually filed estate tax returns for somebody for 15 years.
I mean, depending on how many siblings or
that
kind of issue. Somebody wants to keep a house, somebody doesn't.
Yeah, there's siblings not being on the same page. It's very common. I will segue to one other topic that's related to this, and that's trust. Before I go there, I mean, generally, if you have somebody that died a long time ago, we tend to file 6 years of estate tax returns. That 15-year one I indicated was an anomaly. The person really required it for some reason. But as far as estates, getting a hold of your estate, most people go to probate in the state that they are to make those assets legally theirs. But many individuals do create trusts to pass on their assets seamlessly without make probate very smooth. And that's when somebody sets up a revocable trust that specifies very clearly who gets what, has a smoother path than a will. Revocable trust you could set up individually, and you still have full control of all of your assets and income while you're alive. It's just that when you die, that's when they all go to your peeps in a smoother way. I should also add that some people who want to give to charity might set up an irrevocable trust while they're still alive. Once they do that, they are basically giving up the rights to those assets and putting them under the care of a trustee. And that trustee gets to manage those depending on whatever your mission statement was in that irrevocable trust. For some people, they set up irrevocable trusts for young people that they don't trust with their assets until they reach a certain age.
Sure.
Those are some other themes. But yeah, if you had a loved one pass and there's a significant estate and or some unknowns, you should definitely contact us by sending us an email with a description at watax.com or calling us at 888-282-4697. Give us a call if you have any tax topic, payroll taxes, unfiled returns, balances due that you don't know how to sort out, IRS audits. Washington Tax has been in business for over 30 years.
Yeah, when sum it up by, we have a watax.com website. If you want to delve further into these topics, we'll have pages on our blog. Anything tax related, feel free to check us out at watax.com.
Thanks, Stuart.
Thanks, Jay.